Hey guys, welcome back to the channel. In this video, I'm going to share a portfolio update and why I removed XDTE for WPAY. As always, don't forget to smash that like button and share this video if you like this type of content so the algo guys know that I'm here, and hit subscribe if you're new so you're alerted every time I publish a new video about stocks, investing, finance, and news. But before I get started, a quick disclaimer, none of this is financial advice. You should always consult a licensed professional. With that out of the way, guys, let's get into the video. All right, so I have a video just because I like to bring receipts. All right, so I have a video that I published last month called Roundhill's WPAY ETF. This was right before it launched. The next weekly pay giant, can it beat the S&P 500? And in it, at the very end, I put in pretty much what my thoughts were about WPAY and, actually getting in. So we'll just quickly listen to it.
I don't know when I'll get into it. I'm going to wait for the margin maintenance ratio to come down a bit. I definitely do want to get into this ETF. I think it's probably going to be a replacement for one of my cores, maybe even XPAY or XDTE, to be perfectly honest. I haven't quite decided what I want to do yet, but if this has pretty much the Mag 7 exposure, right? If this has the Mag 7, I mean, this is as good as an S&P 500 in my opinion, right? Of course.
Yep. So there you go. Like getting into WPAY, you're pretty much going to have the Mag 7 exposure, which, is primarily the S&P 500 in my opinion. So anyways, just even more further back than that, because I like to bring, even more receipts. Back in August, I said once the RMAX version comes out, and we were calling it RMAX because we didn't know what it was going to be called, RMAX or Roundhill Max, similar to like Yield Max's YMAX. But I said, once the RMAX version comes out, I'll likely sell XDTE for RMAX after I see a month or two of performance. Since the margin maintenance ratio came down, I decided to hop in. All right, so we're going to be talking about all that today. All right, so let's hop over to the portfolio. Here we are. We had a very, very nasty dip, as you guys can already see. This was that dip that happened today right after news about Oracle had dropped. Basically, they're having trouble, basically making money off of the compute space that they're renting, and that sent the entire stock market down. I don't know. I really think that the market was just looking for an excuse to go down. Hope everybody had a chance to buy the dip for their favorite stocks and ETFs. But anyways, we're here to talk about WPAY. So here it is. All right. So I ended up opening a position on WPAY. All right. I ended up dropping about $80,000 into this ETF. And as you guys can see, I have that curse where I will buy something, and then as soon as I do, usually the market tanks. So it is what it is. I think I bought this, right before, probably minutes before, the news about Oracle had dropped. And then once that news dropped, basically this dropped, right? So it is what it is, but I am using the Roundhill Weekly Pay Universe ETF WPAY. I am going to use it as one of my cores, all right, for this portfolio. I am comfortable enough doing that. It is kind of a spicier core because of the leverage, but I'm not too worried about that in my own honest opinion. So I sold out of XDTE. You guys know this, all right? This is the Roundhill S&P 500 0 DTE cover call ETF. This has capped upside. I just did a video on this, basically going over that, XDTE has been underperforming the S&P 500 by, it seems like a wide margin, and that margin is getting even more wider. So compared to XPAY is doing fantastic. So I decided to keep XPAY and, just get rid of XDTE altogether. Okay, so here are the metrics for XDTE upon sale. So again, I am still in the green on total return for XDTE, which is a good thing. So I didn't sell truly at a loss. Yes, the capital gain, was in the red, but, the dividends more than made up for that. All right, so for any new subscribers, any new viewers who may not be aware of what WPAY is, this is what WPAY is, all right? It is a weekly pay universe ETF. It holds a basket of weekly pay ETFs. That basket is this, all right? You're going to have the Mag 7 in here. So you're going to have weekly pay ETFs like Apple, Amazon, you have Google, Meta, Microsoft, NVIDIA, and Tesla. So there you go. You guys got the whole Mag 7 in this ETF already. And then they added on a bunch of, other kind of like momentum player type, ETFs, things with a lot more, growth prospects, things like Robinhood. You have AVGO actually. So Broadcom is a special one because they just crossed the $1 trillion mark. So this is a $1 trillion company now. So this is, well on its way up to joining, the Mag 7 there. You also have Berkshire Hathaway, Netflix, Palantir, and MSTW. So you have a pretty good basket. You also have Coinbase in here. So you have a good basket of ETFs that make up the WPAY, right? That make up the weekly pay universe ETF. Now, what I like about this is that it's going to change over time. So yes, right now you're starting off with these ETFs, but coming soon, they have some other ones. They have the ARM weekly pay ETF, the Costco weekly pay ETF, and Uber weekly pay ETF. Now, WPAY is only going to hold single stock ETFs. So they're not going to have the gold miners. I don't suspect that they would have the gold weekly pay ETF in there, but maybe they might. But as more of these, weekly pay ETFs come online, then those will automatically get sent into the weekly pay universe ETF, right, over time. And then they'll rebalance it to make sure that everything is kind of equal balance. So I really, really like that. I'm a huge fan of that because, if the Mag 7 have, bad earnings or something, it's not going to take the whole ETF down, right? If everything else is still doing well. And I've been pretty bullish on ARM. I don't have an open position on ARM, but I have been bullish on ARM. I've been following them for a while. Costco, I can take it or leave it, but I know there's a huge fan base for Costco. Uber has been in the news recently, and they seem to be having their comeback moment. But again, I don't really follow Uber like that. Gold is the best performing asset year to date. Shout out to anyone who's been buying gold or who owns, gold ETFs or gold miners or gold stocks, right? You guys have been absolutely killing it this year. So anyways, with all that being said, right, what is the appeal of having something like this in your portfolio, right? Why did I use it to basically replace XDTE? Because XDTE is, doing cover calls on an S&P 500. And I say that to drop an S&P 500 index or to drop an index, like QQQ, you need something big to happen, some type of macro event to happen that would cause a huge sell-off, something like 5, 10, 15%, right? That doesn't normally happen. It is hard to drop an index, but it is very easy to drop these single stock ETFs, right? As we just saw, with Coinbase, they had a bad earnings report and the stock tumbled a lot, right? You have MSTW. This thing has just been unloved for a long, long time. You have TSLW down here. Elon could say something or start to rev up the engine for his political engine again, and the stock will tank, right? So again, you have all of these events that could send these stocks down quite a bit, 5, 10%, even as far as 20% based on just news, right? Or a tweet, right? I call it the Elon factor for Tesla. So again, the beauty of having multiple of these ETFs in a single ETF wrapper is that it's not going to crash the entire thing, right? Having like an index, it's harder for the index to fall than it is for single stock tickers. The beauty again for this is that you're going to have the Mag 7, which make up pretty much the S&P 500, in my opinion. And the reason why I say that is because the S&P 500 over time, it's usually the mega cap tech companies that have driven a bulk of the returns for the S&P 500, right? The technology sector and specifically mega tech cap companies, including Apple, Microsoft, NVIDIA, have provided a large portion of the returns for the S&P 500 over the last decade, driven by advancements like artificial intelligence. These dominant tech companies heavily influenced a market value weighted index, with their performance directly impacting the S&P 500's overall return. So there you go, right? So again, I think this is just as good as holding an S&P 500 in your portfolio. The beauty is that because it has leverage in it, you'll be able to capture more upside, right? You'll be able to get that upside. Whereas with XDTE, you were getting capped upside. So you were going to underperform the market by quite a bit. So that is pretty much the reason why I decided to go with WPAY. It just makes the most sense for me. It makes the most sense for my portfolio. Again, this is making up one of my core holdings in the portfolio. I know there may be some people out there who would get very uncomfortable holding something like this, especially as a core because of the leverage, and I totally understand. But again, I am very comfortable with it. I think 120% is not that bad, to be honest. I think personally, it's a sweet spot. I mean, you have other ETF cover calls or cover call ETFs out there that are doing like 150 to 200%. Now, those I'm a little more careful about than anything. So anyways, outside of that, guys, I hope you enjoyed the video. Hope you got a little bit of value from that. And as always, don't forget to smash that like button. Let me know down below what your thoughts are. Was this a stupid move? Was this a good move? Do you think this, what are your thoughts on WPAY? Have you guys been happy with WPAY? I mean, I think since inception, it's been doing pretty well, and again, it all depends on when you buy these leveraged ETFs, right? That is a very important thing. So outside of that, guys, hope you enjoy the rest of your night. Hope you enjoy the rest of your day, wherever you are in the world. I will see you in the next video. Take care.